Suresh, before we talk about the markets at large, just one quick word on what did you make of Wipro, because it's off 7% in the session. The numbers pretty much in line. Maybe the revenue was a bit of a miss. But why such an adverse reaction?
Sorry, I didn't, have the time to look at the Wipro numbers. But, clearly I think one trend we are seeing is within a range markets tend to, if some company misses guidance or expectations, they tend to be volatile on that day. We saw that with Infi. We saw that with TCS on the positive side, now probably Wipro. But, I haven't had a chance to, go through the full results yet. So apologies on that.
Suresh, what about the overall market? Because that hasn't been reacting to anything. It's been so range bound, volumes have been drying up, clear lack of participation. Is there still an overhang of what GAR may actually mean for FIIs?
See, our view is in the short term, the markets probably warrant a further derating, I would guess. I mean, we have already derated from 16 times to maybe 13 times. But if you see the developments since March, let's say, I think there have been a lot of more negatives. I mean, I think broadly our view is that regulatory risks are increasing across sectors. We saw that play out in terms of international taxation and GAR. We saw that with the telecom sector. We saw that in the gas sector. So any sector you take, there is some level of regulatory risk in most sectors, which we believe will actually dampen the whole confidence which the corporates have, which is needed to kind of revive the investment cycle. And we also think that flows may be, may not be coming in, whether it is FDI or FII, given this bad kind of news flow, bad confidence. So my sense is markets could actually derate from here a little further before, I think, the data points may start getting better. So my sense is, it is not looking very good. We have taken a very defensive stance as of yesterday, saying essentially that, just stick to defensive names for the time being until we see some activity from the government or we see data points otherwise. So we are taking a very defensive stance.
Right. Suresh, you just brushed upon government tampering. What about the 2G recommendations, or rather the TRA recommendations in 2G, and what it means for names like a Bharti, because the stock has really gone battered?
See, I think, the price that the TRA has set as a reserve price, in my view, is a bit unrealistic. So frankly, it may not mean anything in the sense, in the current form, I don't really see operators bidding $3.6 billion for, 5 megahertz of 1800 spectrum, because when you think about it, you pay $3.6 billion, then let's say you finance it with debt, you have another 400 million just on interest, and then you have another 180 million just on depreciation and amortization, assuming a 20-year thing. And then you've got, you've got to take towers. I mean, it just adds up. So even before you start, you are down $1.5 billion or something. So I do think that the recommendations are a little bit, it kind of defies a little bit of logic, because if price discovery is what you intend to do in an auction, then let the auction discover the price. There is no point in, fixing a very high price, and also equating 2G to 3G is another fallacy, I think, because 3G voice capacity is a lot higher, I think 4 to 5 times at least. So I find it fundamentally flawed, and I sincerely hope that these recommendations don't really become the law, because, if it becomes law, then the sector is going to be plunged into a lot of litigation. That is my view, because, the operators probably will move to the TDSAT, and then, after that to the Supreme Court or whatever. So my sense is, so these recommendations I don't think are going through in the current form, is my view. And so to that extent, if you look beyond that, then I think, Bharti is probably a very good buy. But I mean, what the damage that has been done is the regulatory intent. And I also think that, the regulatory intent plus, I think, if you're a foreign investor, you will say, look, what, let me just wait and see what eventually happens before plunging in. So it'll take somebody brave to go and buy it. So from that perspective, sentiment is damaged, but I don't think in the long term, frankly, it makes any difference, because as I said earlier, I don't see these recommendations going through in the current form.
Sadly, with some of the moves, Suresh, that the government or the regulatory bodies have done, the foreigners might not want to invest till almost 80% of the market cap per se. But, I just want to come back to IT, Suresh, and what would you do there? Just a flash that went on your screen earlier about the FMC allowing foreign investment in commodity broking, so stocks like financial technologies and MCX would be interested out there. But Suresh, IT, what do you do now? I mean, Infi, bad numbers, bad guidance, has corrected quite a bit, maybe more downside, but what's your sense? I mean, within the top 4, after the moves that we've seen and after Wipro's move today as well, where do you, if at all, find favor with? Would you go out and take an investment call on any of the top 4 IT companies?
See, first of all, I think, in the current climate where I think there is a potential derating that is possible in the next 3 to 6 months, I think IT sector could generally do okay, partly because of the rupee, because I think the rupee is under pressure, and partly because of, in times like this, there is a general flight to quality. So that is a broad theme. So now within that, I think the one company which seems to be performing quite well is TCS, right? I think they seem to be performing in line or slightly better than expectations. And definitely, I think, yesterday I was in a meeting with TCS top management where I think they seemed relatively confident around either meeting or beating the NASSCOM guidance. So my sense is, stick to TCS probably. I mean, Infosys, yes, it has corrected quite a bit, but I think people would now want to see data points before jumping in. I mean, we are not negative on Infosys, we are neutral. As a sector also, we are kind of neutral, but given the macro kind of the picture, I do think the IT sector will act reasonably defensive. And so TCS is one of our top picks in the portfolio. So, yeah, I'll go with TCS.
Suresh, what do you think is the concern with the entire cement pack? I mean, the way the stocks have been getting hammered, because a CCI probe is not something that we're hearing for the first time. This has been an ongoing process.
Yeah, I think cement stocks have done relatively well before this fall happened. So we have been a little negative around the supply dynamics in the sector. But I think where we probably got that call wrong initially was, I think the pricing power was pretty decent in the sector. And also, I think, it was a sector where I think people wanted, I think the stocks did better than what we thought. Yeah, but I think, the latest fall is certainly due to this. I mean, we don't have any of the cement names in the portfolio simply because we're still concerned on the supply side, I think. And ahead of monsoons anyway, these stocks don't perform. So, at this point, I don't really think, we are recommending any cement name, except I think Grasim we are positive on from a recommendation perspective.
Suresh, so at around 5,200, what do you do? Do you buy distress or do you buy growth? And if so, what is it that you're finding favor with? I mean, people are talking about consumer stocks, 20% bottom line growth. Is that something that you look or advise clients to add on to the portfolio? Or could people look at infra names which are back to slightly lower levels?
I think a combination of both. I think, we are overweight consumers, pharma, in the portfolio, primarily ITC and Colgate on the consumer space. Pharma, we've got Dr. Reddy's, we've got Cipla. We are overweight some of the defensive power names, NTPC, Power Grid. And we also have telecom, just Bharti, because I think at 300 Bharti is a good risk reward in the medium term. And we have 10% cash, so that, if the markets do correct, then, you can add. On the infra side, I think, and BHEL at 8.5 times earnings, I think the risk reward is probably okay. I know there is a lot of bad news on the price. There is all arguments around why it could be zero growth and all that. But at 8.3, 8.4 times FY13 earnings, maybe it is pricing in zero growth, right? So my sense is the risk reward is okay there. IT, I said TCS we like. We like the two-wheeler pack, Hero Honda. We like Bajaj Auto. We like M&M. So those are some names. So those are some names we'll be buying. Yeah.
Okay, Suresh, good to have you on the show as always.